Hello, I'm Evelyn Brooks, and welcome to Built by a Boss. So today, we're diving into a topic about how to protect your credit score in unpredictable economic times. All right, so basically any time, but right now especially. So I started thinking about this topic because I remember how the stock market crash of 2008 impacted the credit markets. So a lot of the banks tightened up on lending and they were reducing everyone's credit limit in fear that people might default, right? So if you had a $15,000 credit limit and your balance was $12,000 or $13,000, they saw you at risk of default. And so they may reduce your credit limit and then your utilization is at 100%. So now you have to pay that credit card down to reduce your utilization, and your credit score will definitely drop as a result. So that was what was happening back in 2008. Now, there's a lot of economic volatility right now, whether it's the stock market, the tariffs, the banks, the interest rates. All of those things are like a cocktail, right? Where anything could go in any direction. So we want to think about these things, basically financial housekeeping, so that regardless of what happens, you will have a strong credit score and available credit to help you during tough times or in the midst of any type of transition. What type of transition? Well, your job, for instance. What happens to your credit score if you lose your job? More specifically, how can you protect your credit score if you think you might get laid off? But it's important to really think about this because in today's economy, layoffs can happen to anyone. And while we might not be able to control what happens at work, we can take steps to protect our financial foundation, right? Starting with our credit score. So today I've got 15 practical steps to help you keep your credit score strong and steady, even in the face of economic and employment uncertainty. All right, so some of these are going to be, if you're the type of person that's on top of your credit score, some of these might be like, well, of course, it's a no-brainer. But then some people are just not really checking their credit scores like that. So this can be new information, but I think there will be something here for everyone. So number one, check your credit report ASAP. All right, before anything else, pull your credit reports from all three bureaus, Experian, Equifax, TransUnion, and you can get them free at annualcreditreport.com. And so first, you want to look for any errors, any unfamiliar accounts, anything suspicious. If you spot a mistake, dispute it. You want your report to be clean and accurate before anything gets complicated, right? And so you want to also, number two, know your credit score, your current credit score, not what it was last month or 6 months ago, but current, right? This sounds easy or simple, but a lot of people don't know their credit score until it drops and you go to apply for something and you're denied, and then you check your credit score. So check your credit score. And knowing where you stand helps you track changes and take action early if anything starts to happen, if your credit score starts to slide. Okay, so if you're nervous about your job, it might be tempting to say, well, let me apply for these new cards or a loan just in case. But you should know that a new credit inquiry or a credit check can lower your score slightly. And of course, if you're worried about paying your bills, another credit card is another bill. So if you really need a backup line of credit, be very specific and strategic about it. Look at the interest rates. Make sure you're looking at the annual fee. You can sometimes think, oh, they're going to give me X number of dollars. And then you notice that there is an annual fee of $150 that they're taking out once a year or over 12 months. So just don't get any credit card. Be very specific about what the details are. So you really need to be thinking about your budget, right? And create that budget now. If you think a layoff might be coming, or if you think your financial circumstances might change, create a budget and literally start living as if, right? And not from a space of lack, but from a space of being intentional. By looking at your budget, by being aware of what is coming in and out of your accounts, by looking at subscriptions and apps on your phone that are just whittling away at your income every month because you're not paying attention, dining out to the point where you're paying double what you would pay if you cooked at home, or if you're door dashing all the time and there's a $20 fee on every order because of tips and taxes and this and that. So all of that gets really expensive, and you can pause things that are not really essential right now. And of course, every dollar that you save is one less dollar that's going to go on your credit card, right? So the goal is to preserve your cash and keep up with your payments on your credit accounts because it's important to protect your score. So if you have to cut back on your subscriptions and your DoorDash to make sure that you can keep your credit cards current, it's worth doing that. All right. Number 5, prioritize your payments. Your payment history makes up 35% of your credit score. So that means missing payments, especially on credit cards or loans, is a fast way to drop your score. I mean, you cannot miss payments. It's crazy how quickly your score will drop, and you may have been working for months and you miss a payment, and all of that effort is out the window. So you want to prioritize keeping all of your accounts current, right? Keep all of your accounts current. If you have to pay the minimum, it's better than paying nothing at all, right? You just want to keep your payments current. All right. Number 6, reach out to creditors proactively. So this is a big one. If you think you might fall behind, you can call your creditor before it happens. A lot of lenders have hardship programs or forbearance or reduced payments if you're facing a job loss, but they can't help you if they don't know what's going on. And so I know that sometimes when you're in a situation like this, you're actually afraid to call the credit card company because you think it's going to have a negative impact on you. But ultimately, they would rather help you stay on track than ultimately write your credit card off because you can't pay it. All right. So being proactive can protect your credit, and it will keep your accounts in good standing until you get back on your feet. All right. Number 7, avoid maxing out your credit cards. Credit utilization. Oh my goodness, it's so big. It's so big. And a lot of people don't think about how important credit utilization is. It's 30% of your score. So if possible, you want to try to keep your balances under 30% of your credit limit on each card. So that's what they say. But I think it's much less than that. And some people say 20%, some people say 5%. I have even heard 2%. But 30%, if we know that's the minimum, you definitely want to be under that because you have no grace, you have no pad. The minute you're over 30%, then you'll start to see little hits to your score, right? So you want to try to really keep low balances and resist the urge to put something on your credit card unnecessarily. All right, number 8. All right, look into balance transfer options or lower interest offers. So, of course, this is something that you can do while you're in a situation where your credit is top tier. If you're already carrying debt, depending upon your credit score, you can qualify for a 0% APR balance transfer or lower interest loan. But just be careful about that because I think it's better to really figure out how to get that debt down so you're not just transferring the balance to another card and now you have the cards that are clear with an open credit limit and you can find yourself kind of chipping away at that new credit and then you're in a worse position than you were beforehand. All right, this is a good one. I think a lot of us are like, well, you don't have to worry about this happening. But a lot of times we do help our loved ones build their credit. But for now, avoid co-signing for anyone, right? Because this is not the time to put your credit on the line for someone else if you think you are going to need it in a time of crisis or financial slowdown or unemployment. Because if they miss a payment, your credit takes the hit. And if you're out of work, you may not be able to cover their cost, their payment, right? So protect your score, protect your name, protect your wealth. This is number 10, but it should be number 1, but it's just not always possible. And while this isn't directly tied to your credit score, your savings will determine whether you need to rely on credit at all, right? So you want to create that cushion for yourself. And some people are like, I don't have $5 to create a cushion. Well, start with that $5. Start with what you have, and as you are able, contribute something to your cushion. And we always have opportunities where we can sell something, we can pick up some type of side gig, we can freelance, we can share and teach our skills. So any cash you can stack right now means fewer charges and more breathing room later when you absolutely need it. Okay, number 11, set up automatic minimum payments. All right, so, you have to get to a place of stability in a sense where you know exactly what is in your account and what is coming out and when before you set up automatic payments to your checking account, right? We have all been here where when you're coming up and you set up minimum payments automatically and things are coming out and you're like, oh my God, I forgot that this was coming out and you went out to dinner. Yeah. So when you're coming through a time where you don't have a lot of money, you want to be careful with that. But what I do love about minimum payments, it helps you create a stellar payment history, right? Every month, you know that payment is coming up. Every month, you know that payment is coming out of your account, and that is showing up on your credit report. So when life gets hectic, a layoff, stress, interviews, it's easy to forget to pay a bill. So set up your auto pay for at least the minimum on all your credit cards. And then if you want to come back around and pay more, you can do that. All right. But that way, even if life gets a little messy, your payment history, the most important part of your score, stays intact. All right, number 12. Okay, so this one is a good one. And I feel like we don't talk about this enough. Don't close old accounts. All right, so this seems counterintuitive, right? You're saying, I'm not using this card. I should close this account. But you don't want to do that because older accounts contribute to your credit age. Older accounts contribute to your credit age and available credit, right? So when you close a credit card, it reduces your available credit as a whole, and then it also reduces the age of your credit. So if you've had a credit card for 15 years, and then your newest credit cards are within the last 5 years, you're going to lose that credit age from closing that older account, and then your score will be impacted. So when you close that older account, your credit age shrinks, right? So it seems like, oh, you've only had credit for 5 years instead of 15 years. So your credit age and available credit, those are two factors in your score. So even if you're not using the card, leave it open, especially if it has no annual fee, right? So that's an important thing. All right, number 13, use a credit monitoring service. Credit tools like this help you track changes in real time. So if your score drops or a new account pops up or just something is fishy, you'll know right away. Many of them are free. Credit Karma is free. Experian's app is free. If your budget allows, you can consider a paid version that includes identity theft protection. But you can also freeze your account so no one can run your credit. And if you want to have your account run for a mortgage or a new credit card or something like that, you just unfreeze your account, they run it, and then you freeze it again. All right. Number 14. Okay, these are all the rage right now. The buy now, pay later accounts, Klarna, Afterpay, all of that. They just make it all look so good, right? You could split anything and everything into 4 payments right now. And so, it's good sometimes if you can use it responsibly. But just know that a lot of them now are reporting to credit bureaus, so a missed payment can hurt your score. And then they also add up. So if you're looking at all the things you've always wanted and you're putting everything on easy payments, for easy payments, and so you're looking at it and you're saying, oh, well, that's only $15 a month. And then you do it again on another purchase. Oh, well, that's $40 a month. And then maybe you do it a third time. And then, okay, that's $12 a month. So now collectively for the next 6 months or year, however long you make the payment plan, that lump sum is coming out of your account in addition to the payments for the credit cards you already have. Okay, number 15, build a credit backup plan with a trusted friend or partner. Okay, this takes trust, and in some cases it does help, but you have to be discerning about who you do this with because they need to be somebody who is serious about maintaining their finances as well. So, if someone close to you has great credit, they could add you as an authorized user on one of their well-managed accounts. And you don't even have to use the card. Just being on the account can improve your credit utilization and the length of your credit history. But again, trust is everything. This is a conversation you need to have. Maybe you create an agreement around this that whatever, if they charge something, that they will pay for it. But it is a way to help you kind of expand your credit utilization in the event you need to build your score. But of course, if you have lost your job, you're not going to be able to pay this ideally. So this could be something that someone does just to help you through a tough time, right? But again, this is a conversation that you definitely have to have. So 15 tips that you can put into your financial toolbox and just start to really think about your credit score as something that you want to protect and grow before you actually need it, before you have to fall back on a credit card or anything like that. You want to do that work of getting those payments in on time, reducing those balances. You can approach it in many different ways. You can pay off the largest balance first. You can pay off the balance with the highest interest rate. And I'll talk about that in another podcast because paying off your credit cards is an episode in and of itself. All right. So before we go, I'm going to run through those 15 tips right quick. In the event you have a credit score that you want to protect. All right. Check your credit score. Know your score. Don't open unnecessary credit. Create a survival budget. Make at least minimum payments. Talk to your creditors early. Keep your credit utilization low. Consider a balance transfer as needed, but don't run up the other cards now that they have a lower balance. Don't co-sign for anything. I love you, but no. Build a side cushion, right? Your emergency fund. Automate minimum payments so that your payment history is sterling. Don't close old credit cards because that reduces your credit age. Use some type of credit monitoring system so you are always getting notifications about what's happening with your credit score. Be very careful with buy now, pay later, and explore authorized user options if necessary, but only with people that you trust. All right, my friends, that's it for today's episode of Built by a Boss. I hope this gave you some clarity or peace of mind. Do me a favor, if you think this was a great podcast and this is information that someone you know needs to know about, share this podcast with a friend. And remember, a layoff is a chapter. It's not the whole story. And with the right mindset and some smart money moves, you will come out stronger on the other side. As always, thank you for listening, and I'm so grateful for you. If you like this podcast, please subscribe and share it with someone you know who might like it too. Consider giving us a 5-star review and a comment. And you can follow us on Instagram and our website. Until next time, be kind, be brave, be better, be a boss.